Hey everyone, welcome back. I know a lot of you have been asking about this, so today we're diving into machine learning for stock predictions. It's one of those things, right? Huge potential, but, well, it's the stock market. Always tricky.
Oh, yeah, for sure. I mean, anyone who says they've got a guaranteed system with algorithms, let's just say be careful out there.
Exactly. So no magic bullets here, just a clear look at what's really going on. We've got some interesting stuff, your notes, of course, and then this video I found talking about digital real estate, still wrapping my head around that one.
Oh, yeah, that's a whole other conversation.
It is, but for today, let's stick with how machine learning is being used right now for stock predictions. What are the algorithms? What are the pitfalls? What does all this mean if you're actually trying to make smart investment decisions?
Great place to start. Got to know what the tools can and can't do, right?
Totally. So to kick things off, what's the most exciting thing happening? Like, how is machine learning actually being used in trading today?
Well, there are two main areas. First, you've got stock trading optimization. Imagine algorithms going through tons of data, mountains of it, trying to find those signals, the buy and sell points that could actually lead to profit.
Wow, so it's like, what, a research team working 24/7, except instead of coffee breaks, they're crunching numbers.
Oh, yeah, exactly. And they can go beyond just the basic numbers, too. We're talking global trends, even social media sentiment, stuff that's hard to quantify but definitely affects things.
I guess it's about finding those hidden connections that we humans might miss. That's impressive. What's the other area you mentioned?
Portfolio management. This is more about AI helping you build a diversified portfolio based on your goals, your risk tolerance, all that. Kind of like those robo-advisors, but even more personalized.
Okay, I've heard about those robo-advisors, but I gotta ask, are there any real-world examples where this is actually working? Otherwise, it's all just theory, right?
No, there are some pretty compelling success stories out there. One that comes to mind is Numerai. It's a hedge fund around since 2019, I think, and they're doing something really unique. They've got data scientists from all over competing to build the best algorithms. And get this, they get paid in cryptocurrency.
Whoa, cryptocurrency, that's a whole other level. But why would a hedge fund crowdsource their algorithms like that? Doesn't seem very traditional.
It's not, and that's what makes Numerai so interesting. See, they don't really give the raw data to these data scientists. It's all encrypted.
Encrypted, like a secret code.
Yeah, exactly. They do that to prevent bias and also to encourage models that can work no matter what the market's doing. They call it blind prediction.
Oh, I see. So it's like a blind taste test, but for algorithms. Only the ones that truly understand the underlying market will do well. That's fascinating. Are there any other examples out there?
Oh, yeah, definitely. Even some of the major stock exchanges are getting into this now. They're using machine learning to build portfolios, but they're combining it with, they're not just going for quick profits.
Oh, interesting. So they're taking a more balanced approach.
Yeah, they're blending in things like, technical analysis, looking at price patterns and all that, but also fundamental analysis.
Hold on, remind me, what's fundamental analysis again?
It's basically looking at the company itself, like their financial health, their management team, their position in the industry, all those things that can affect a stock's value long term.
Right, right. So it's not all just about algorithms chasing the next hot stock. This is starting to sound pretty serious. So let's talk about those algorithms. Ready to get a little technical.
Let's do it.
All right. What are some of the big names, the ones people should know about?
Well, one that you'll hear a lot about is the random forest. It's really good at handling large data sets and finding those hidden relationships between different factors that might affect stock prices.
Random forest, huh? Sounds more like a nature documentary than a stock picking tool.
It does, right. But don't let the name fool you. It's powerful stuff. Think of it like a detective looking for clues, but this detective can analyze millions of pieces of information all at once.
Okay, that's pretty impressive. What else is in our algorithmic toolkit here?
Another common one is the support vector machine, SVM for short, known for its accuracy, especially when you've got mountains of data to work with. And it falls under the category of what we call supervised learning.
Supervised learning. Intriguing, but maybe a little complex. Can you break that down for us?
Oh, it's not as complicated as it sounds. Imagine you're trying to predict whether a stock will go up or down tomorrow, right? So you feed the algorithm historical data about that stock, price movements, trading volume, even news articles maybe, along with what actually happened each day.
Ah, so it's like we're giving the algorithm a history textbook and saying, study this, now tell me what's going to happen next.
Exactly. Now, If you want to go even deeper, we got to talk about deep learning. This is where things get really interesting.
Bring on the deep dive.
Deep learning models, things like transformers and recurrent neural networks, RNNs, even the names sound kind of
They
sci-fi.
do, like something out of a spaceship.
Well, they're amazing at spotting patterns in time series data, which is essentially what the stock market is, right? Data points over time. So they can analyze those past trends and try to project how things might play out in the future.
This is all super exciting, but I know you're also the voice of reason here. Even with all this incredible tech, there must be some challenges, right? It can't all be smooth sailing.
Oh, absolutely. You hit the nail on the head. Even the most, sophisticated algorithm is only as good as the data you feed it. Garbage in, garbage out, as they say.
Data quality, that makes sense. If you're training an algorithm on bad data, you're not going to get good predictions.
Exactly. And that means having reliable data from sources you can trust. Bloomberg, Reuters, that kind of thing, not just random websites or social media chatter.
So it all comes down to the source. What else should we be thinking about here? What other challenges are there?
Another big thing is that these models need constant attention. You can't just set it and forget it. They need to be monitored, tweaked, retrained to keep up with the market because the market's a living thing. It's always changing.
So a model that worked perfectly last year might be totally useless today if it hasn't been updated.
That's a good way to put it. It's like having a race car. You can't just build it and expect it to win forever. You need a pit crew to keep it tuned up and performing at its best.
Great analogy. But even with the best data and the best tuning, are there just inherent limitations to what these models can do?
Yeah, there are some things that are just really tough to predict. One of the biggest challenges is dealing with, those unpredictable market events, the anomalies.
Anomalies, what do you mean by that?
Think about it. These algorithms, they're trained on past data, right? But what happens when something completely unprecedented occurs? Like, I don't know, a global pandemic.
Oh, wow. Yeah, I remember that. The market went crazy. Nobody knew what was going to happen.
Exactly. Those kinds of events, they throw everything off. Historical patterns go out the window, and the algorithms, they just struggle to make sense of it.
The black swan events, they really mess things up. Anything else we should be aware of?
Well, another challenge, and this is a bit more philosophical maybe, is the potential for over-reliance on these models. Let me ask you this. What happens when everyone starts using the same machine learning strategies?
Ooh, that's interesting. If everyone's using the same data and the same logic to make decisions, I guess it could create a kind of self-fulfilling prophecy. The patterns they're trying to exploit, they might disappear because everyone's acting on them.
You got it. You end up with this market saturation, everyone making the same moves based on the same signals, and suddenly those moves aren't so profitable anymore.
Like a game of musical chairs, everyone rushing for the same seat, and somebody's going to be left standing when the music stops. So even under the best circumstances, machine learning can't perfectly predict the future. Where does that leave us? What are the key takeaways for investors?
Well, that's a great question. And it gets to the heart of what really matters here. Machine learning can be a powerful tool for stock prediction, but it's not a magic solution. It's not a crystal ball, right? So where does that leave investors? What should they be focusing on?
Well, data quality seems like a big one. You said it yourself, garbage in, garbage out. If you're using algorithms, you got to make sure they're learning from good information.
Yeah, absolutely. And it's not just about the quantity of data, it's the quality. And the other thing is these models, they're not static. They need constant attention. They need to be evaluated, retrained, to keep up with the market because things change all the time.
So it's not like a one-time setup. You got to keep working on it. What else should investors keep in mind?
I think being realistic about the limitations. Machine learning can help us see patterns, make more informed choices, but it's not going to eliminate risk entirely. Human judgment still matters.
Which brings us back to something you mentioned earlier, those notes you had about digital real estate. Seems like you've been thinking about this concept quite a bit.
I have, yeah. It's an interesting idea, but like anything else, you got to approach it with a healthy dose of skepticism.
So for our listeners who might not be familiar, what exactly is digital real estate?
The basic idea is that instead of investing in physical property, you're investing in, revenue-generating software, like a website, an app, a subscription service, something like that.
And the video you were talking about, they were arguing that this is a better investment than traditional real estate, even cryptocurrency.
That's right. They are making the case that digital real estate is more scalable, more accessible, and even, recession-proof. because people rely on software and online services no matter what's happening in the economy.
Hmm, I can see the appeal. But I imagine there are risks too, right? I mean, we just talked about how unpredictable the market can be.
Oh, of course, there's no such thing as a guaranteed return no matter what you're investing in. And with software, I mean, its success depends on so many things: market demand, competition, technology.
Right, and technology moves so fast these days. What's hot today might be obsolete tomorrow.
Exactly. And then there's the question of valuation. How do you determine the true value of a piece of software? It's not as straightforward as, looking at a building or a piece of land.
So there's a lot of uncertainty there. What about this company, Innolab? They were mentioned in the video. They seem to be really pushing this digital real estate concept.
Yeah, Innolab is positioning themselves as kind of a one-stop shop for anyone who wants to get into this. They offer services to help people develop, market, monetize their software products.
So they're like the real estate agents of the digital world?
In a way, yeah, they're facilitating the buying, selling, management of these digital assets. But
Yeah.
again, we got to be aware of the potential downsides.
What are some of the red flags investors should watch out for?
Well, one thing that jumps out is the potential for, hype and overpromising. That video we talked about is very enthusiastic about the potential of digital real estate, but it's still a pretty new, untested concept.
Right, and it's easy to get caught up in the excitement, especially when you see those presentations, those promises of high returns. But I guess what we've learned today is that you got to look beyond the hype. You got to understand the fundamentals.
Absolutely. And that goes for any investment, whether it's stocks, real estate, digital assets, whatever. Do your research, understand the risks, and make decisions that align with your own goals and your risk tolerance.
Solid advice. I think we've covered a lot of ground today. Maybe it's time to step back and, recap some of the key takeaways for our listeners. What would you say are the most important things to remember?
Well, for me, the biggest takeaway is that machine learning AI is powerful. It can definitely be helpful for stock prediction, but it's not a magic bullet. It's not going to hand you a winning lottery ticket.
Right. Algorithms are only as good as the data. And even the best ones can't predict everything, especially those black swan events that can shake things up.
Exactly. And we need to be aware of the potential pitfalls, things like market saturation, everyone piling into the same trades, becoming too reliant on those predictions without thinking for ourselves.
All great points. So for our listeners out there, what's the one question you want them to walk away thinking about? What's the big takeaway from this whole conversation?
Hmm. It's a good question. I think the most important thing to ask is this. If even the experts, with all these advanced tools, can't perfectly predict the market, what does that mean for individual investors? Is it about trying to find an edge? Is it about managing risk? Or is it something else entirely?
That's a great question to ponder. I think it's about finding that balance, leveraging the power of technology, but also maintaining a healthy sense of skepticism.
Exactly. And never stop learning. The more you understand about how these technologies work, the potential risks, the better equipped you'll be to make smart decisions.
Couldn't agree more. Well, I think we've given our listeners a lot to think about today. Thanks for joining us on this deep dive.
My pleasure.
It feels like we've gone beyond just machine learning and stock predictions here. We're almost talking about the future of finance, even the future of how we make decisions.
Yeah, I think you're right. All this tech, it's forcing us to rethink our relationship with data, with prediction, with risk, really. And as AI and machine learning get more sophisticated, it's not just about making money, it's about making responsible choices, choices that align with our values.
Well said. And for our listeners out there, if you're feeling a little overwhelmed by all this, I get it. Finance is getting complex, but that's why it's so important to, do your research, ask questions.
Absolutely. Don't be afraid to seek out expert advice. The best investment you can make is in your own knowledge and understanding.
Couldn't agree more. Well, that's all the time we have for today's deep dive into machine learning and stock prediction. Hope this has given you a clearer picture of what's really going on out there beyond the hype. Thanks for joining us.
Yeah, it was my pleasure.